Welcome. Thank you for joining us today. Super happy to have Eric back, who I've known for I don't know how many years now, but
Yeah, about 3 years.
four. Yeah.
Yeah, just three.
And so excited to get the update of about the venture fund and talk more about how this all evolved and getting to know Eric for the community here. And so super glad to have him once again. And um, uh, as you all know, at the end of this webinar, we'll be making sure that you can get in touch directly with Eric and chat more if you care to, as it relates to what he's doing in the fund. And I think one of the most interesting things is being that he's from the part of the world that isn't known for venture. It now has become known for venture. And so I'm going to let him articulate that better than I. But he's one of the venture funds in that part of this country that has actually put some numbers up on the board and cobbled together a nice group of companies to invest in and focused on that area. So we're going to talk more about that. And so in next week, we're also going to come out and talk more in detail about the fund. So stay tuned for that date and time. And if there are others that you think might be benefit from hearing what you hear today, there not only will be a recording, but you can ask them to participate next week and share that with them. And please feel free to do that.
Please do.
Yeah. And so we have a little history. So we're broadcasting live, by the way, from Park City, Utah, where I am. And Eric is in France. So thanks for staying up. Yeah. So
We just got back from dinner, so thank you.
yeah. Yeah. So great. So Eric, tell us, introduce yourself and then tell us a little bit more about how this all evolved.
Absolutely. First of all, thank you. I am going to apologize. I'm sitting in the kitchen of an Airbnb. My daughter's studying at the University of Lyon, and my wife surprised me with tickets to visit her on her winter break. So it just turned out to be this week. So I'm coming to you live from an Airbnb in Lyon, France. But lovely week here. Better weather than we expected. So yeah, the long history obviously is that I was a fuzzy-haired scientist working for the government for about a decade. I became an entrepreneur, having sort of bristling at the yoke of the bureaucracy. And then, of course, I got invited to join a group of investors also about 12 years ago now, and have been basically managing investments in heartland companies now for about 12 years. And so we've learned a lot, and we'll talk a lot about that today. But yeah, you and I met at the beginning of COVID, if I remember correctly. I was looking at starting a fund, and we've had several smaller funds. Actually, we've been creating small venture funds and more of a syndicate SPV model. Actually, we've been doing that for about a decade, well, maybe a little more. But that's how you and I got associated, and it's always been a pleasure listening to your counsel on these things. So thank you for letting me come back in and address the audience.
My pleasure. I hope you didn't listen to too much I said. Maybe good stuff. Yeah.
No, it's again, it's always been a pleasure working with you. So I guess some more of my background, the where why am I here? Why am I talking to you? Kind of question. I joined this group in 2012. They're one of my investors in my last company that we exited. And it was a group called Angel Capital Group. And I got invited to join the team, and I thought it'd be a lot of fun. After spending a decade as an entrepreneur, I thought, well, this, hopefully I know something, unique and different. And so I wanted to learn the investor side of the process. And it was eye-opening. I remember at the time thinking, now I understand what they said. When they said, we don't like your valuation, it really meant we don't think you have a big enough market to exit with the valuation that you're asking for. And so there was a lot of learning. I spent about 2 years sort of managing the deal flow, investor relations stuff, and then I actually took over the whole network in 2015. And again, we were a syndicate SPV model before that was cool. Essentially, we were doing that in 2012 and have been for our entire history. And I moved the whole organization closer to a more of a traditional venture model. Some success, some of those efforts were successful and some of them weren't, but we have consistently invested in what we found was, we tried a Silicon Valley deal or two, and quite frankly, they were disasters, and we realized the fallacy of that process. The deals that get out to us in the heartland from Silicon Valley are the ones that nobody wants on the inside.
The picked over deal, right?
Yeah, we figured that out. We figured that out pretty quickly and said that's kind of silly. We're not going to keep doing that. What we did figure out, because we were starting to have some success in the heartland, was we figured out we're really, really, really good at finding, high-tech entrepreneurs, because that's what we have out in the heartland. They're engineers, they're research lab people, they're research university people. What we found is that there's a gap in knowledge, sometimes some soft skills, and we started a whole sort of process around investor readiness for wannabe entrepreneurs, put it that way, in the heartland. And
So
wait,
hang on.
Yeah.
Just define the heartland so we know. Yeah.
Gotcha. The flyover parts of the country and the flyover parts of the flyover parts. We live and work here in Knoxville, Tennessee, Louisville, Kentucky, Nashville, Tennessee, Cincinnati. That's where all of our GPs are. So we kind of have this big central upper South and Midwest focus right now, and we've got investments as far as Michigan and Florida up and down, and then we've got investments as far west as I think the Salt Lake City, Utah. So it's mostly it's outside the traditional monetary centers. That's kind of the heartland for us.
Yeah, super helpful. Were most of the angels in that
Yeah.
group angel investors that were in your Knoxville area community that you knew, or did it extend beyond that?
Well, over time, as we began to expand geographically, our footprint and our outreach, yeah, we started again. We merged with another organization called the Sheltowee Network. That's why my email is sheltowee.com. Back in 2020, and so we expanded both geographically, and then of course we picked up the Allura folks, and we'll talk about the GPs later. But we picked up the Allura Network, Allura Capital folks with us, and then they're in Cincinnati. So yeah, we've got kind of a foothold in that upper South and Midwest area.
Nice. Yeah, continue.
Oh, anyway, so what we found was that there are a lot of incredible things going on, a lot of incredible technology, world-changing technologies, high-value technologies, but they were being founded by people that didn't understand how to talk to investors. And so we started a whole program around investor readiness, which is a code word for business readiness, to be honest. We've had some real success with that. We've actually, the Oak Ridge National Laboratory actually paid us to create an entire investor readiness program for their Innovation Crossroads incubator program. And so we've been doing hands-on coaching. We've been doing the sort of that closing that educational gap and creating an entire learning management system for highly technical folks to become successful entrepreneurs. And so we tested that before we really understood what we were doing. We knew we were good at that. We just hadn't sort of codified what we were doing until probably the 2019, 2020 timeframe, when we really figured out what we're really good at and really doubled down, just of course in time for COVID. Yeah. And so there's that. Yeah. But we've had 6 exits in the last 4 years, between 2 and 6x. So we've had our investors have been very happy. And I'll talk about sometime tonight, this afternoon. We've got another 9, 10 companies that should all exit in the next 36 out at the most, maybe 48 months from now. And all of them are raising capital. And we've been cultivating these deals within our angel group, which is, again, it was really a syndicate SPV model more than traditional angel investing. We've been working with some of these companies for 3, 4, 5 years, and they're known quantities that we understand the management team. We understand how they take capital, how they're, what kind of stewards of resources they are. Are they doing the smart things? Are they able to hire people? We get to watch them in a hands-on fashion. And our angel group typically will make 2 to 3, maybe sometimes 4 investments in these companies over time. And then the fund is here to pick and sort of cherry pick. So what we talk about is validate, go through this process, making sure they're ready for venture capital. accelerate. I know that's a term of industry. We're sort of co-opting it a bit, but accelerate with the angel group that again do SPVs, and then ignite is kind of what the word we use for the venture fund. So it invests in the winners and drives them to exit. That's really our model. And we're
If you had to say, does most of the deal flow come from that evolution?
yes.
And were you able to glean any good deal flow from your relationship with Oak Ridge?
Excellent question. Both of those, yes. Again, we perfected this over the 15, 16, 17, 18, 19 kind of time frame, and then really began to consciously deploy on this model. So yes, we have, and the other, yes, we are absolutely pulling deal flow out of Oak Ridge. In fact, we've got one company, again, I'll talk about it later, but it's a new 3D printing technology that expands throughput of 3D printing by up to 5,000%. They can actually print parts cheaper than you can do injection molding. And
Which
the only
was
thing
the
stopping us,
challenge with 3D printing, right? The time and the cost, right? Yeah,
it's huge.
that's
That is
amazing.
a game-changing technology.
Yeah.
And we need to put a couple million in this company, and we need to do it quickly. They're already literally getting investment off, getting acquisition offers, but we're not going to maximize the value of this exit unless we can put some money in this company. And we've been supporting them. We've got to the point they're ready for acquisition, but I think we can. I think an acquisition at this point is probably 2-3x for us, and I think with put a couple million in this company, let it run for another year or two, it's a 5 to 10x.
Yeah, yeah, push it out a little bit.
Exactly. Got to
Yeah.
push out. They've crossed the revenue barrier. They've got POs. They're filling them. They found some incredibly high value niche applications where materials that only they can print, which is phenomenal. And we just need to put some more money into them and get them over that hump so they've got a robust revenue stream and get a bidding war going for them instead of taking the first offer. Although it's going to be a good offer, but
So that was an Oak Ridge
that is an Oak Ridge technology.
Genesis company, yeah.
Came out of the Oak Ridge program, and there's a dozen more like it so we have, I won't call it a proprietary deal flow pipeline, but pretty darn close. We get in these companies early and work with them, and so we get a phenomenal called dwell time. We get dwell time with these companies. We can watch them and see how they behave. Are they coachable? And all those important things we talk about, because one of the challenges of this whole venture model forever has been it's one thing to analyze a deal. It's the hardest thing to analyze is the team.
Yeah.
It's the founder and the team.
The founder, and of course, in life and in business, it's kind of the same as when you find an attribute that's good, it usually comes along with some bad, right? Yeah. So the balance, right?
Well, the nice thing is because we're getting them so early, we don't have to break them of bad habits to start teaching them.
Because they haven't created them all yet.
Right. They haven't even created the bad habits yet. So I mean, in a big way, that's a huge benefit for us because we can come in and fairly, as I said early, and really coach to success.
Yeah. Would you say that one of your biggest challenges, if not the biggest, is just not having committed capital to, like in this case, come up with the $2 million just because the fund wasn't big enough?
Correct. We raised about $1 million last year, and then the world got very, very weird and capital ran to the sidelines.
Yeah.
We put money in about 14 companies last year. Most of those are just placeholders, as you can probably figure out.
Yeah.
And we need to put more money in those companies, and we've got another 10 here that are raising capital that right now I believe will all be exiting in 36-month to 48-month time frame. Some of these are like there's a company that we invested in that's the largest producer of graphene in the world. We were there. We got about $2.5 million in that company, and we need to put some more money in. They're at that point where they're starting to scale their sales and biosensors and coatings in several different areas, and we need to be able to put more cash in that company too. And literally, now if you study graphene a lot, but there's microscopic flakes, and then there's sheets or films.
Layers, yeah.
So this stuff is, they figured out how to make, they can with one machine, they've got their version 3 machine, which we paid for version 1 and part of version 2. They can print, they can deposit 60,000 to 200,000 square meters of graphene a year out of one machine.
Yeah.
And this is extreme. This is all one atom thick, one layer, pure graphene on just about any substrate you want. It's printed, it's deposited on copper. But this is a company that has, an answer to this miracle material. They can produce it almost like a Xerox machine.
So
Roll fashion. It's
we talked about that simply because we had another company present to the
right.
group that was raising money to
Yep.
Build
right.
a machine that they know works, but with the same objective, like
right.
do it at scale, right?
Bear in mind that the flake and the sheet have largely, well, they overlap a little bit, but they have very different markets.
Application for the, okay. Yeah, super
So,
interesting. So are you structured in a way where somebody can come in, invest in the fund, and then do a co-investment outside the fund with a lower friction?
yes, we made a conscious decision to allow that. We
Yeah.
think it's got to be in the interest of our companies. First and foremost, we want to set these companies up for success. And finding, obviously we're here, we're investing, we're there, we're in the heartland of America investing. But one of the challenges is there aren't a lot of funds give it lip service, but not a lot of them actually show up to invest. So having more people at the table rather than less is just a strategic advantage for our companies. And so we're wide open to co-investment.
Yeah. So wasn't Peter Thiel looking to do a flyover state fund? Did that ever happen?
Peter is, as far as I know, I've been looking at it. I haven't sort of found any big announcements. But Steve Case, has been on a bus driving around the U.S. making $100,000 investments all over the place.
Yeah.
I would say the difference in a lot of this is just that hands-on active investing that we're doing, because again, these people, they're again brilliant people doing brilliant things, but they don't have a history of the venture capital investing or managing these things. Most of them don't. Some of them do. But so this is a hands-on model, and we're really good at it. And the good news is, I think we've got about 80 investors in our quote unquote angel group that we call upon to help. That's our force multiplier, is we've got phenomenal people in 4 cities that can pitch in and help when we need these companies. As they say in the South, lay hands on these companies.
Yeah. So what would be, if you had to spin it out in the next 12 months, what would be a good outcome? Raising 2 million, 5 million, 10 million, 25?
It's $25 million target fund. We raised $1 million. I need 5 million in 24 to accomplish my 24 goals. And then, yes, I need to raise the rest of it pretty quickly after that. But we're going to invest at a pretty fast clip, because we've got the deal flow.
And a warehouse,
Yeah, we got 10 warehouse deals that I'd put money in right now, plus another 14 we've already invested in that most of them need additional capital. So it will not be a problem investing the money and doing so wisely. But yeah, I need a minimum of 5, and 10 would be ideal for 24. Not ideal. Actually, that'd be great. 20 full 25 would be ideal.
Yeah. Would you mind, you just described a really interesting one. Can you describe a couple more for us?
Sure. Oh man, it's one of my favorite things to talk about.
Is it okay?
We talked about the 3D printing company and the graphene company. Here's one that came up and came out of nowhere in December. One of the California refugees that moved to Knoxville, Tennessee, and I had become friends and started working. I met him through Oak Ridge National Lab too. He came to me and he said, "I think I know how to create a program that will actually analyze the inner workings of an artificial neural network and be able to tell you data came in this side, answer came out this side, and what any specific piece of information that went through the system, how it impacted the system, and what was its impact on the outcome." So he calls it an MRI for AI. He also said, I think I can have a prototype in 30 days, and I think I can have a client in 60. And I laughed at him and said, you're crazy. And he said, no, trust me, I think I can do this. And so I spent a day going through it, and by golly, not only he was correct. He's already got the model working. He's already got 2 clients that will all start piloting in April of this year. But what he can basically do is we're of the opinion that a big battle over IP is coming with the AI market.
No doubt. Yeah.
No doubt, has to. So what his model sets up is not just a means of figuring out when a model is going awry, which happens more frequently than you can
It
imagine.
hallucinates. Like I've been in this, by the way, Eric, in the last month. And so I'm not saying I know what I'm talking about. What we know, they hallucinate, right?
Yeah, it's called a local minima. They reach a local minima, not a solution minima. So they get stuck at a plateau and haven't fully solved for the correct answer. At least that's from I've done some work in this in the past. But long story short, so he can figure out when that's happening and how to stop it to avoid all these headaches. He can, of course, we all worry about the science fiction writers, their dreams and fantasies. And then the big thing is this sets up a monetization model so that, Journal of American Medicine can open up their paywall to an AI, and the AI then there's a means of compensating them for the use of their intellectual property, which we believe firmly has to happen. So that came up literally just 2 months ago, and it's already working, and this company already has clients. So that's one we want to put a good bit of money in. We put 100,000 to start it in. We've just put another 100,000 in. They're doing about a $500,000 round right now to get through their beta testing phase, and then they'll do, of course, a significant round, probably a $5 or $10 million round after that to scale. But we're insiders, and so we can take as much of this round as we want.
So
we've got to go ahead.
No, I was going to ask about the opening up the paywall, sharing the IP, getting paid for it. All makes sense to me. Is he of the mind that footnoting and attesting, attributing the source is not sufficient?
The question is, at least in our discussions and his concept is, there's this hidden layer of nodes in the middle of an artificial neural network.
Yeah.
And they adjust based on an input data and a known answer. And so at this point, understanding the contribution of any specific piece of information. So there's a JAMA article that went through, and it was 20% of the outcome. Then that's a palatable attribution and monetization model for that. So because you can't, you're either going to have some. Well, let's put it this way. We think of it as equivalent to the royalty structure in the music industry.
Music business, yeah.
Yeah, exactly. It's going to have to get down to that if we're going to open up, because one of the bigger challenges of AI is garbage in, garbage out. And if you can't get to all the interesting information that are all behind paywalls, industry associations, medical journals, scientific journals, things like that, these AIs are starving for, they're being fed,
whatever they can get. Yeah.
Fed steak. Yeah. They need to be fed steak, not crackers. So that's why we think that's an important one.
Yeah. Can we stick on, and we have a question about that company is, I'll read it to you. On the AI company, what is the valuation for the $500,000 round being raised? Not sure I get
it. Is a Series seed round at $7.5 million pre-money valuation.
Okay, good.
Yeah, we did a founders round for it actually was a convertible note with a $2 million cap, and now we're doing a $7.5 million Series seed round.
Yeah, thank you, Goodwin. We know Goodwin well. Does Eric have a valuation ceiling, and what is the typical valuation for the pre-revenue tech company like 3D printing company discussed?
Great question. We did some with the 3D printing company right now. It's all notes. We just did a small equity round with them. So we've got, the notes were all capped at, I think, 6 million pre, with standard 20% discount, 8% interest kind of stuff. We just did a small round of, equity in them because it was, long story short, they needed some cash fast, and so we put some money in. I think it was still in a 4 or 5 million pre. And so this round will probably, there's Series A, which is into which all of these notes will convert, somewhere around a 10 to 12, probably million, pre-money valuation on that. But they've got, pretty impressive offers already to start investing and acquiring this company. So
Yeah, it seems, the more I think about it, if someone's going to let you into their paywall, then you better be able to at least tell them that you're going to use the information in a credible way and pay for it. And then, of course, the challenge would be scaling till you get behind a lot of paywalls, right?
oh, exactly. The AI company. I'm sorry. Yeah, I was, yes, without a doubt. Yeah.
Yeah.
We've got some more. I've got a cleantech company. It's a rechargeable battery chemistry company. We found them really early. They'd already gotten something like 20 million in grants, so they were further down the road, but same theory. We found them early, worked with them, made several investments. They've got 1.2 billion in purchase orders. They've already pre-sold their first 5 years of production.
Rechargeable battery, like household battery, AAA type?
No, this is grid scale batteries. Then they move
Yeah.
into EVs.
Yeah.
In about 2 years, they've got 2 different chemistries. One of them is from Oak Ridge National Laboratory. That's why we got a hold of them. Came out of Oak Ridge, and so that company they'll start shipping product here in Q2. So, I mean, this is something, again, we've been working with them for about 3 years, and they're at the point now that they can start to scale, and they've got the purchase orders in hand to do that. And again, we need to put a couple million in that company. So, yeah.
Super interesting. Those are,
we got some medtech companies. Another one, cherry pick a little bit here. I know it sounds like we're doing that's true. We've got a smart inhaler company that we've worked with this company for 7 years. We've invested in 4 different rounds of capital with them, and they will be in 150,000 pharmacies this summer. They're going to basically switch on a somewhere between a $1 and $3 billion revenue stream this summer, and they're planning an IPO in 25, and they think they can do incredibly well with that IPO.
over the counter or prescription inhaler?
Over the counter. This is over the counter. They have some pharma applications that will be script.
Yeah.
But they've got to do some more medical trials before they can do that.
Yeah. Yeah, if they get over the counter, that's a barrier that you can live with, even though it's been 7 years. Yeah. Super interesting. So I know you mentioned it at some level, but for the 2024 goals, that 5 companies and 3 follow-ons, if you had the cash?
Well, we wouldn't take the whole bite of each of these. And that's why we're asking for also co-investment.
Yeah.
So we'd spread that 5 million over certainly these 10 companies and probably a few more. Certainly some that are already in the portfolio.
Yeah.
Again, we got some medical devices in there that we have a resorbable magnesium structural plate system. This early startup company that we're supporting, and I mean, it's, as far as we can tell, it's the optimal degradation of magnesium for structural plates like maxillofacial, which nobody else can do. So there's stuff like that. We find it really young and really early, and we work with them, and we turn them into success stories.
And that came out of what state?
That one's Michigan. Yeah,
Yeah.
we found that one in Michigan. Yep.
Smart people
An
everywhere.
accelerator program.
Yeah. Smart people everywhere.
I'm constantly amazed at the people I meet in this industry starting companies.
Yeah.
Brilliant.
Yeah. I'm not surprised anymore, but I'm amazed as well. Meaning, it's amazing how many people come to New York City and how smart they are and everything they do, but there's people everywhere.
I love New York.
Yeah.
Yep, New York's great. Love it. Trying to think of some other ones. We have there's a company we invested in as a non-opioid, non-pharma opioid treatment, opioid addiction treatment, and it's fantastic. It's literally, they figured out how to stimulate a nerve in the head that eliminates withdrawal symptoms within hours. So, I mean,
Is it a
again,
medical device or a?
it is a medical device, yes, and it's FDA approved already. In fact, they're going after, and this is the heartstring puller, but they're going after a neonatal indication
Oof.
because so many babies are being born with opioid addiction, and it's a pretty miserable way to come into this world. And so they think they're going to have that probably the next 3 to 4 months. They should have a neonatal indication approved or cleared, and so they will be. That's one that, you know, we like to say we like doing well, doing good, or doing good, doing well, whatever, however you want to say that. But you know, it's the impact we can make with some of these companies is not something we take it lightly.
Yeah.
That's a one that we really, really, really love for so
And
many
is
reasons.
that like a headset or like a patch?
It's actually, it looks like a set of right now it looks like like the old Walkman headset. It
Yeah.
fits in the ear. It's got a piece over the head. But that I think they're going to move to. I think they're getting rid of the piece that goes over the head.
I think I know that company. You don't have to
You
tell me.
probably do.
Yeah.
Yeah.
Super interesting.
Yep.
I mean, I'm sure you've seen the documentaries or at least some of them about how horrific the
Oh,
opioid
oh, like I
process
said,
was.
and let me be honest, the Heartland is the bullseye for this opioid epidemic. So
Totally.
it's not surprising that we have, we're seeing deals that are going after that.
Yeah.
And there's a couple more that we've seen that we have not invested in yet, but
Yeah.
some some treatment management software and things like that. But yeah, we especially, it's probably worth mentioning that what we're really, really good at is the deep tech, hard tech, med tech, clean tech. We do some fintech and SaaS, but we're very good at advanced materials, advanced, manufacturing. Tends to be heavily IP focused stuff. That's where we sort of find our bread and butter, is in that space. And the good news is, for us, this is the reason that we're reaching out, is this is stuff no one's going to see on the coasts until it's too late. Either
Yeah.
they've already exited, or the early the huge gains in valuation have already been taken up by somebody.
So in your journey and doing all this and touching into Silicon Valley and running out the door when you figured out what it was, and I'm not trying to be disparaging about them, but
No,
the it's interesting to see that how much the Silicon Valley crew has leveraged the FOMO, right? So if
oh sure.
Andreessen Horowitz
Mhm.
is so huge, and if they put a stamp on something, everybody runs right after it.
Mhm.
Have you been able to evaluate on some level or another, aside from what looks like a success? In other words, if you're investing in them because they're so huge and flushing most and harvesting the unicorn seems to be the model. Uh, is that still sustainable out there?
It's a great question. I mean, I think on and off, most people assume that it's a bubble, and that it's gonna have its boom bust cycles. I think that's probably true. I will tell you that I see a lot of people, especially in the Valley, looking out here for deals at reasonable valuations, deals with real deep intellectual property. We'll have conversations around you know uh, the cost of living, things like that. I mean, I can invest in companies at significantly lower valuations. Typically, it's more of a simply put, it's a buyer's market out here for people like me.
Yeah.
If you know where to look.
Yeah.
And so we can typically find very good deals and negotiate for very good deals that you just wouldn't find in the Valley. So is it sustainable at some level? Absolutely.
Yeah.
And we've been offered other deals, but again, we know what we're good at, and it's right here in the heartland. That's what we're good at. So
We've seen a lot of, I'm spent a lot of time in Park City over the last 3 years,
I
and
love Park City.
really interesting people in Salt Lake, smart, right?
Mhm.
Everybody paints Salt Lake City with the LDS brush, which is
Mhm.
totally fine. But one of the things, if you don't mind me editorializing, is
Mhm.
we've learned is that whatever you want to think about dogma, religion, or whatever it is, one of the things that's really been crystal clear is that when people are brought up in that LDS community and they're sent on missions,
Mhm.
they get resilience and a bulletproofness to no's because they're out trying to recruit everybody to LDS, and they've been taught for an extended period of time that a no is not personal.
Right.
And so they create great, smart salespeople.
Oh, it's incredible sales training. Absolutely.
Unbelievable,
Yeah.
right? And to a person, even when you speak to the current and former LDS community, they actually attribute and willingly attribute part of their success to that training, right?
Mhm.
Forget about the dogma or the religion part of it. It doesn't have
Right.
anything to do with it. It's like builds character, right?
It
Yeah.
does.
Super interesting. Yeah. Yeah. There's
Without a doubt.
lots of smart people out here.
Mhm.
Yeah. So what do you if there was a besides the blanket, invest in our fund, you know, what's the LPs look like now that you like? In other words,
Yeah.
what's a good profile of an LP for you?
Great question. We're looking for obviously $1 to $3 million check writers at a minimum. At this point, we've raised the million from individuals, and we can keep doing that. In fact, we are doing some of that right now. But I'd really like to have some LPs that sort of believe in the model. I really want some believers that really want to be investing in the heartland and want to be co-investing. I think that's a strong indication of the hearts and minds in the right place. Um, we love family offices, obviously, and we've worked with high net worth individuals before, so I don't really have a quote unquote preference between those two. But it's someone that really, wants to make an impact in the heartland. That's really who we're looking for.
And the structure, is it drawdown, committed capital, drawdown?
Good question.
Yeah.
Yes, yeah, we expect to invest the entire 25 million within a 3 to 3.5 year period. So we're basically calling it all now. It's a standard, 220 fund LP GP structure, and we're just gonna call it all and go.
Yeah. Very, very cool. Well, this has been super interesting and I appreciate reconvening after all
Oh,
this
no,
time.
thank you for the
Yeah.
opportunity.
Yeah. And um, I think the date for everybody is March 7th, where we're going to get into the weeds
Yeah, do a full pitch.
and
Yeah.
talk more about that and invite everybody to come back and chat a little bit. What's the co-investment outside of the fund friction? Yeah.
None, I mean, strategically, obviously, obviously like them to invest in my fund first. But the
Yeah.
reality is that we need to bring more capital to the heartland. I've got more deals than I can invest in.
Yeah.
So, the greater the exposure, the better strategically for the whole industry out where I am. So this is not a competitive market. It's generally a pretty collegial and gentlemanly market in that respect. We
Yeah.
typically share well. So
Yeah. How do you talk about your performance historically, since it's been separate SPVs and then Sheltowee, and how do you talk
it
about?
yeah, it's difficult. We have been from the old Angel Capital Group through the Sheltowee days. We've invested through one holding company. It's called Angel Capital Group Fund Two, and we've got I think 86 rounds of capital in 56 companies, and every one of those investments is an SPV. And I can do that. It's very efficient for me because I can put any amount of money and any number of investors in that SPV and close it up, and it's all under one EIN, so it's one tax filing, that sort of thing.
Yeah.
So we've been doing that for 12 years. probably going to close fund two, probably in the next couple months, because I think we've got 100 investors in that fund, and so we're going to move. We'll probably start a fund three, but that's really, again, that's fulfilling the angel model. That
Yeah.
doesn't has little or nothing to do here, except for the fact that this
Deal
fund is cherry
Yeah.
picking the winners
Yeah.
from that fund.
Yeah. Yeah. How big is that fund? Or
It's
entity?
yeah, okay, so it's
About.
14 million, give or take.
Yeah.
I'll get you an exact number, but it's
No,
around 14.
no, I was just curious,
Yeah.
in the range. Yeah.
Right. Yep.
Yeah.
And we've got some other, like I've got a small cleantech fund, company that was doing just had a phenomenal technology for converting the really heinous, it's called brown grease, the animal lipids and stuff that nobody else can deal with. They figured out how to turn that into biodiesel, and so we put some money into them. They're about to be acquired by. They're on a three-year acquisition buyout process with a major oil company. And so we're about to get some cash out of that deal here in the next month, and then we'll have another 2-3x payout as that buyout goes on. So we've got success in a number of different spaces
Yeah.
here, both funds and through the old, the quote unquote angel group, which is again really an SPV model.
And this is probably not fair, and you tell me if it isn't. If you looked at the typical Silicon Valley VC,
Mhm.
and again, it's just uh, a way for me to compare it,
Right.
where they're throwing as much money as they can, flushing 80%, holding on to the middle, and then exiting the unicorns. Have you had the flush, 20% of your companies? And is that representative of
Great question.
how it compares
We are
to?
still, yeah, we're under 20% that have fallen off.
Yeah.
And we've been going now, some of the, again, we've been going for 12 years on this fund. So it's in the life, don't get me wrong, but we just put a bunch of money into it. So it's hard for me to give you exact numbers. And I know that's why I guess that's why a lot of people discount the angel model,
Yeah.
because it's basically been an evergreen fund for 12 years.
Yeah.
So we don't have the results, but all 10 of these companies I'm talking about that'll be exiting in the next 36 months are all in that angel fund, and they have and they will do. I expect them to do very, very, very well. We'll be certainly over a 50% IRR. Certainly
Yeah.
over.
Yeah. Sweet. Well, this has been super helpful. I'm glad to have gotten the update too.
Yeah, a lot's changed since the first time you and I met. I think I don't think we were telling the right story, and I'm not sure we're telling it to the right people before. So again, that's why I was so excited about the opportunity to talk
Yeah.
to you.
Yeah. I mean, you guys have made great headway. It's a good story to tell now. Yeah.
Yeah.
Super appreciate it. Well, enjoy your family out there in France, and then safe travels back. And then we'll see you next week. And um, super appreciate you being here, Eric. Really.
No, thanks, Arthur. It's been a pleasure, and I look forward to next week.
Yep. And as I always say, thank you all for joining us today, and stay tuned for an invitation to next week. And if there's anybody in your world that appreciate being part of that, please feel free to invite them, and we'll make sure everybody can get in touch with Eric and then post the recording as well. So with that, as I always say, thank you for spending with us the only thing you can't make more of, and that's your time. Thank you very much. Thank you, Eric.
Thanks. I appreciate it. Not at all.